What a bounce back day for the stock market today, guys. Holy crap, we got a lot to talk about in this video. We got to break down some earnings, Apple, Amazon, Intel, and a bunch of other ones. We also got to, of course, break down the overall markets, kind of what I'm doing and where my head is at overall. But before we do that, hit the like button, subscribe, and get yourself some free money from Moomoo. Just use my link down below, deposit at least $100, and you get up to 6 stocks, each up to $3,500. I'm telling you guys, it is free money. Again, use that link down below. And now let's dive into the video. So get this, guys. Again, it was a freaking unbelievable bounce back day today. We had the NASDAQ 100. Brace yourselves for this, guys. It closed up 3.5%. We had the Russell up 1.8%, S&P up 2.5%, and we had the Dow up about 1.8%, same as the Russell. And the VIX, believe it or not, only went down about 5%. Really not a, excuse me, guys, really not that bad of a red day for the VIX, like you'd think, right? The VIX would be down 15% today. It was only down 5%, and we had silver down 1%. Gold ended up going up on the day, which is pretty interesting, up 0.4%. So we got a lot to break down, like I said. And this morning we got some news, and I talked about this in my video from earlier today, which we talked about 3 oversold stocks. Go make sure to go watch that one after this video. Of course, we talked about how Q1 GDP came in at a 1.4% decline in the United States, which is interesting because the analysts were expecting a gain of 1%. And if you guys didn't know, let me read you this. This is from Oxford, right? The official definition of a recession. This is literally copy-paste from Oxford. A period of temporary, and this is what it is, guys, a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. So what did we just get? We just got a 1.4% decline in 1 quarter. Now, if the next quarter is a decline again, let's say we decline by 1% or something like that, 1.5%, we are going to be in technically a recession by, the official definition, which again, I just read to you guys. So we are in a very rocky spot right now. I'm not sure if the yield curve is still inverted. I don't think it is actually, but it was recently, and we know historically that is a very good, indicator of a recession to come. Typically recessions come, 12, 16, 18, 24 months after that the yield curve inverts. So that's one thing we got. Now we got concrete proof that, the U.S. is declining. So we could be in recession literally right now. And honestly, guys, I would not be surprised if we were in a recession right now. And I guess we'll find out in a couple of weeks, when we get the Q2 GDP number, which should be in probably a month, 2 months, probably a little bit more than a month. But yeah, watch out for that. That's going to be very important. And overall, again, we had a ridiculous bounce back day in the markets today. Just look at SPY from top to bottom today. SPY, and we're talking intraday here, SPY went from $417.60 to $429.60. It ran up about 3% intraday from top to bottom. Triple Q on the flip side did way better than that, and 3% is hard to top, but it did top that. It went from $317.50 to $329. Triple Q went up 4% intraday from top to bottom, which is unbelievable. And now it's actually down a little bit after hours. We had Amazon report. I don't think Apple reported yet when I'm filming this, but don't worry, we're going to talk about Apple's earnings. Do not worry, guys. We'll check it in real time. So we are seeing a bit of a pullback after hours because of Amazon, and we'll talk about that here in a couple of minutes. So make sure you guys stick on throughout, and let's take a look on the 20-day chart and see if we're still in a downtrend. And yes, we are. If you guys take a look on Triple Q here, we rallied and pretty much tested the 180 SMA, which is at 329, 330. We closed right under it. And now with Amazon reporting, I'm not sure if Apple's numbers are out yet. Like I said, they might be. But now that Amazon's reporting, that stock is falling. I spoiled it, guys, but the stock is falling. I'm sure you guys know that. That is bringing down the markets here right under the 180 SMA, which if you're a bull, you need to see Triple Q break out of 330, 335. If that happens, if we start breaking those levels, Now we're talking a more extended relief rally could be right around the corner, but we're not there quite yet. And let's see, SPY. Let's pull up SPY. Same thing with SPY, right? We're right by the 180 SMA. We ran up to it, closed right under it. Now after the bell, we're down a little bit. Let's see here. SPY's down about, after the bell, it's down about 0.7%, just about $2.5. So nothing crazy. And let's see what Triple Q's down after the bell. Probably down a little bit more. Triple Q is now down about 1% after the bell, giving back a little bit of that 3.5% green, a gain that we saw, throughout the day. So what do you guys think? Do you think, seriously, I want you to answer this question for me. You can literally say yes or no or give out a more thought out answer. I don't care. Just let me know in the comments. Do you think we are in a recession right now? Do you think we're in a recession right now? Let me know your thoughts in the comments. And if you haven't done so already, make sure to smash that like button and subscribe. We're so close to 25,000, guys. Let me pull up and see where we're at right now. We're at 24,943. So we are about exactly 57 subscribers away from 25,000. So if you haven't already and you're watching this, make sure to subscribe. And with that being said, let's see if Apple reported. They might have not done so yet, because they do report typically after all the companies report. Sometimes at 4:30, and we do have about 4 minutes left until 4:30. So we'll wrap back around in a couple of minutes here to see what Apple is doing, the numbers, the segments, all that good stuff. But I do know for sure Amazon reported right after the bell, about a minute after the bell, and this stock is down about 8.5%, 9% right now after market hours, after going up over 4.5% on the day. So that is not good, guys. That's not good. Amazon is getting clobbered right now. It's giving back, today's gain and some. So what is going on? Well, Amazon ended up doing negative $7.56 of EPS versus the $8.07 estimate. So they completely missed the ball on EPS. They were unprofitable on the quarter, and they barely beat on revenue, $116.4 billion versus $116.3 estimated. So they missed wildly on EPS. They barely beat revenue. And the sales guidance for Q2 is freaking horrible. Well, I don't want to say horrible, but it's under the estimate, a good chunk under the estimate. They see Q2 sales of $116 to $121 billion versus $125.55 billion. So the low end of that range, $116 billion, is about $9 billion under the estimate. And the high end of the range is $4 or $5 billion under the estimate. So Amazon is, the sales guidance is horrible, and I guarantee you that is a big reason why the stock is going down today, and maybe because of that, unprofitable quarter, the big miss on EPS. And let's see what else is going on this live news tab. I'm not really seeing anything else, other than what I just told you guys. They lost about $3.8 billion on the quarter. Loss included pre-tax valuation loss of $7.6 billion for investment in Rivian Automotive. Oh, maybe that's why they lost on this quarter. Maybe it's probably a one-off quarter, guys. I got to look deeper into it. But overall, that is what we're seeing right now on Amazon, and it's completely in free fall. It's in free fall mode. Look at this. It just hit a fresh low on this 4-hour chart. This might even be a yearly low, guys, or a year low, 52-week low. It is. Believe it or not, it is. So if we're at about 2,500 on Amazon right now, it is officially down. And there goes Siri again. Shut up, Siri. Always talking to me while I'm making these videos. It is now down over 30% from the all-time highs, which were hit. When was that hit? In July of last year, July of 2021. So Amazon's down a big amount, and who knows, if this thing starts going low 2000s, guys, hey, and especially if it gets under 2000, which I don't suspect, but never say never. If that were to happen, that would be a very, very interesting spot for Amazon. Of course, in my opinion, guys, you must always do your own research. So let's see what's going on with Apple, do they report yet? I do not want to miss this. Let's see here on the intraday. Probably not quite yet. Nope, they did not report yet. So let's go to Intel. Intel reported they did adjusted EPS of 87 cents versus 80 cents estimated. We got revenue at $18.4 billion versus 18.31, so nice double beat for Intel. And their guidance, they see Q2 adjusted revenue of $18 billion flat versus $18.38 billion estimated. So a little bit under on the sales guidance there for Q2. And it says here reaffirms guidance. So maybe they already had that. Or maybe they reaffirmed some other guidance. But either way, that's what we're seeing right now. And let's see, did they increase their dividend? I hope so. I mean, I own this stock, so that'd be nice if they increase the dividend. I'm not seeing anything. And when do they pay? I just realized. I want my check, guys. I want my check. It looks like they pay on the 5th of May, so about a week from now, I guess exactly a week from now, they're going to pay about 36 cents. Awesome, which is higher than 2 quarters ago when they paid about 34. So they are increasing that dividend over the past couple of quarters. They had a double beat. And again, the sales guidance came a little bit soft, and the stock's down. The stock's down about $1, $1.50. Nothing crazy after the bell, but nonetheless, it is down about 4%. Pretty much, essentially, giving back that entire gain from today. If you guys take a look, Intel went up 3.5% on the day today, and it's down about 4%. So we gave back that entire gain, and I'd say, this is nothing crazy. It's nothing to worry about, in my opinion. We're just seeing a bit of a sell-off after a solid double beat, and I'd say poor sales guidance. It wasn't the worst sales guidance, but obviously not the best either. So for Intel, again, I'm long. Full disclosure, I am long Intel, and I do not plan on selling. And honestly, I don't really plan on buying any more Intel right now either. I'm just holding on. My average, I think, is right around $53. I am admittedly down on the position, guys. Oh my God, I'm down on the position, but it's a longer-term play. And again, this stock pays a dividend, and that's the beauty about dividends, guys. Maybe you don't like dividends. Maybe you hate dividends, and I'll be honest, I'm not a huge dividend guy where every stock I own needs to pay a dividend, but I like having my little fair share of dividend stocks, right? And if you're getting that quarterly check, monthly check, depending on the company or the ETF or the REIT, whatever, if you're getting that, it's kind of like the cherry on top while you wait for, the price to start going back up again, in other words, because ever since I've owned Intel, the stock has been going down slowly but surely, but I've been collecting the dividends, which has softened the blow a little bit, and I still believe $52 a share is, still an undervalued price, so I'm still holding on, and I do believe one day 60, 65 plus is where Intel is going to be, and until then, I'm going to be keeping my money in it, collecting the dividend. Now let's go back to Apple. Dang it, they better have reported by now or I'm going to be mad. The stock's moving up. That means they reported, guys. Yes, sir. Look at that. They hit $169 here just about a minute ago. Now they're at $167. So let's see what they did. They did $1.52 EPS versus $1.43 estimated, $97.3 billion in sales versus $93.89 billion. So a nice double beat. 2022 Q2 22 sales, iPhone sales rather, were 50.57 billion. Mac sales were 10.4 billion. Let's see here. They raised their dividend from 22 cents to a whopping 23 cents, guys, 23 cents. And the iPad sales were about, let's see here, $7.64 billion. Wearables, which I got one right here, the iWatch Home, and accessory sales, $8.8 billion. So you guys can see clearly they make the most money from the iPhone, which is obvious, but they're still making a crap ton of money from Mac, from iPad, from the accessories, home, wearables. If you add those up, guys, they're still making $25 to $30 billion, in revenue, excluding the iPhone, which is fantastic. What's their services revenue, though? Is that not here? Let's see the services revenue. There it is. Services sales, 19.8, almost 20 billion. So add that on top of it, right? So they're slowly, what's the word here? I don't want to say they're ditching the iPhone, but they have really done well over the past, couple of years at diversifying, how much money they make from or diversifying the streams of income within the, individual business, right? Which is obviously Apple. And then, of course, they have all the different segments, right? So not too shabby, guys. Let's see here. Greater China revenue, $18.3 billion. Americas is right around $40 billion. Europe sales, $23 billion. Rest of Asia Pacific, $7 billion. Japan, $7.7 billion. Apple says they now have more than 825 million paid customers across services on company's platform. And like I said, I have a watch, right? And I actually am signed up to their services. So a lot of people are heavily intertwined, obviously, in the Apple ecosystem. They either have a watch, the phone, the iPad, the Mac, which I'm filming on a Mac right now. And once you're in this ecosystem, quite frankly, you don't want to get out. At least I don't want to get out. And I know most people don't want to get out. And that's why I think Apple is going to be here for quite some time. Do I think it's going to be here in 50 years from now? I'm not going to make that bet, guys, because in 50 years, who knows what's going to happen in 50 freaking years? But in 5 years, absolutely. 10 years, I'm confident in 10 years as well. So for that reason, Apple, I'm long Apple. Same with Intel, right? So I'm long these two stocks, and I'm very happy with it. I'm very happy with it. And let's see here. Are they increasing? Oh, they authorized to increase existing buyback of $90 billion. I wonder what they're increasing it to. But overall, I'd say a very good quarter from Apple. And you guys know it's the biggest company in the world, and it has a huge weight on the overall markets. So this could spur, maybe, just maybe, I'm just speculating a bit, this might spur a multi-day rally, or who knows? We might dump tomorrow. I don't know. But this very well could spur a multi-day rally, so watch out for Apple AAPL. Let's check out some other stocks now, guys. Let's bang through some other ones before we wrap this video up. We had Roku report today. This stock went up 8% on the day, and now let's see what's going on. Oh my goodness, guys. Talk about volatility. Jesus, look at this. It closed at $91. It shot up to $99. It shot down to $75 after it reported. So it initially fell about 17-18% after it reported, and now it's up. It just hit $102. Now it's at $96. So talk about volatility. Roku did EBITDA of $57.6 million on the quarter. Revenue came in at $734 million versus $718.31. So I'm not sure if their earnings beat. I didn't see an estimate, but they did beat on revenue, and they added about 1.1 million active accounts for a total of 61.3 million on the quarter. So not too bad. And again, I'm not sure if EBITDA missed or beat or whatever, but what I do know is, again, we are up now after the bell, and this stock is very freaking choppy after the bell. So let's see what's going on this 4-hour chart. We're still clearly in a downtrend. I have one alert at $180, which is very far from where we are right now, so I might as well just erase that and draw a new one, or create a new one rather. I'm going to put an alert at $115, guys. 115. Mark is at or above. If we break out of that point, which is right by the moving averages on this 4-hour time frame, that is where Roku could really start to move. Maybe back up towards 125, 150, mid 150s, maybe even higher, but we're not there yet. We're only at $95. Again, we're still in a downtrend, so be careful. Let's see what Robinhood did. Robinhood dropped the ball, guys. I did look at it before. They did EPS of negative 45 cents versus negative 36 cents estimated, so they missed on EPS, and they missed very, very badly on revenue, guys. Very, very badly. $299 million versus $355.78 million estimated, so very bad EPS miss, very bad revenue miss, and the stock is down a lot. It's down, well, it closed at $10 or $10.09. It went up 6% on the day, and it just hit about $9 flat recently, which means it is down 9%. It's down way more than what it went up on the day. It went up 6%. We're down almost 10%. And to be honest, guys, I am not surprised. I've been very skeptical about Robinhood since they went public, and I told you guys when they went public. You might be new to me, new to my channel, but if you were watching my channel over this past summer, July, August, I was telling you guys, watch out for Robinhood. And when I saw this thing go up from 37, you guys remember this? It went up from 30 to 85 bucks. I mean, it was just such an easy call that, if you bought Robinhood or buying it at that point would have been stupid. It was such an easy thing to call out. And look at where it is now. It is down 90%, 80 to 90% from that all-time high, which is just unbelievable. And it doesn't seem like it's turning around. It's not like we're getting any positive catalysts. I mean, every quarter it seems like they're just getting slaughtered, and they just got slaughtered again. They're missing on EPS, missing on revenue. I'm assuming guidance is not looking good. So I don't know why anybody would want. I don't want to bash you guys if you own Robinhood. I mean, kudos to you. I hope you do well. But in my opinion, I don't know why you'd want to hold Robinhood. I mean, I just don't. I don't know. It's just me personally. I don't know why. And I mentioned that when I talked about it almost a year ago. I was telling you guys, there's no way I'm buying this stock ever. And I'm still in that mindset now. You couldn't, honestly, if you gave me the stock for free, I would sell it. I mean, that's how much I don't want the stock. But anyway, I don't want to bash Robinhood like I did Teladoc yesterday, but here we are, guys. Here we are. So the next one, which I guess on a more positive note, Mastercard, they did very well today. They did EPS of 276 versus 217 estimated. They crushed EPS, and they ended up crushing revenue, $5.1 billion versus $4.91 billion estimated. So very nice quarter for Mastercard. And I'm actually seeing a bit of an inverse head and shoulders playing out here. I'm not sure if you guys can tell, but give me a second if I can do this. You might be able to see it with me here. So we got the left shoulder there, the right shoulder, and then right around here we got, the left shoulder, head. Here we got the right shoulder, and we're clearly breaking out. Today we went up about 5%, and we're right at a big level of resistance, 380 bucks. If that point is able to break, guys, I'm telling you, if 380 breaks, 400 is right around the corner. That is where we could complete this inverse head and shoulders, anywhere from 395 to 400. So I'm telling you, watch out for Mastercard. It's gaining some steam on a nice double beat. And we had Twitter this morning, which is the last stock for this video. If you are still here, guys, if you're here, I'm talking to you. Hit the like button if you haven't already, and make sure to subscribe. And of course, I appreciate you guys for being here as always. You are awesome. Let's take a look at Twitter, which went up 1% on the day. Not too bad of a day for Twitter here. And what we're noticing is the bulls still seem to be in charge. We're clearly above both moving averages. We're in this wedge. We bounced off the 50 SMA today. So they ended up doing EPS of 61 cents, which is up from 8 cents year over year, which is solid. Revenue came in at $1.2 billion versus $1.22 billion. So almost a beat there on revenue, but not quite yet, guys. They missed by a little bit. And we got Q1 advertising revenue rising. It rose about 26% on a constant currency basis, and Q1 U.S. monetizable daily active usage is right around 39.6 million, which is up about 6.5% year over year. So at this point, you guys know Elon owns Tesla, or not Tesla. Well, yeah, he owns Tesla, but Twitter, he owns Twitter now. He just bought the company. So at this point, I feel like people aren't going to dump their Twitter shares on a report like this where it probably wasn't the best report, because they kind of want to hold it out, stick it out, and see what Elon does. They kind of want to stick it out. So that's why we didn't get a massive dump. I guarantee you guys, no joke, I guarantee it. Obviously, I can't 100% guarantee it, but I'm confident that if Elon did not buy Twitter, let's say he just stuck with his 9% stake or whatever, and they reported this quarter, the stock would be down a lot. I feel like it would be down a lot. Or let's say we got news. Obviously, if we got news that Elon sold out and they reported a quarter that wasn't the best, the stock would be in free fall mode. But again, now that Elon owns the company, the stock's kind of like, okay, people are like, okay, let's wait this out and see what Elon could do. So that's kind of some thoughts on the markets, individual stocks, GDP, what I'm looking at. So I'd love to know your thoughts. Again, drop me a comment. Do you guys think we are in recession right now? Let me know in the comments, hit the like button, subscribe, join my Patreon, and make sure to get your free money from Moomoo, up to 6 stocks, each up to $3,500. Just use my link down below, deposit at least $100, and boom, you get your free money. Or go to stocksurfest.com/Moomoo. Again, deposit at least $100, and boom, you get your money. And with that being said, I'll catch you guys in the next video. Thanks for watching as always. Peace out.